Hi everybody, I'm sergiok.kilembe from Trading Wall Street TV, and thanks for joining me for this week US market weekly reports. We're gonna cover the weekly market analysis, a technical analysis, and we're gonna have a look at major indices, ETFs, the VIX, the US dollar index, and then we're going to have a look at commodities, crude oil and Brent oil, precious metals, gold and silver, and finishing with Bitcoin versus the US dollar. And also we're going to have a look at some macroeconomics and microeconomics data. Okay, now let's begin here with the Dow Jones Industrial Average bearish week, as we've been analyzing for the past couple of weeks. What we expect just occurred. We see here a break below the 4 weeks moving average and the 8 weeks moving average, and now we are moving towards the 18,000 points, and that's a past resistance over here. We see 1 time, 2 time, and now that's a support level, and also that's the region of the 21 weeks moving average over here. So you can see the probabilities are going to the downside and then bounce here, bounce over these trend line support over here, and then boom, go back higher. Or if we break below the 21 weeks AMA, we're gonna go and directly to the 17,500 points over here. We see the volume, the bearish volume, coming closer to the average, and also you see the markets are heavily oversold over here, so maybe it's time for a correction. Already the convergence already happened here, so now we are expecting the market to go below 80 points over here on the stochastic, and then entering the bearish territory. But really we're gonna be bearish on more. We're gonna be more heavily bearish over here when it crosses below the 50 points mark over here on the stochastic. So that's it for the Dow Jones Industrial Average. Now let's have a look at the diamond, the SPDR Dow Jones. Over here, same scenario. We see second bearish week. Over here we had that we had that indecision over here, then that this reversal pattern, and as you can see here, that occurred over here at the resistance level. Then the break below the 4 weeks moving average and the 8 weeks moving averages. We also see a convergence. That means low volatility. But now if you take a look closer, between the 8 weeks moving average and the 21 moving average, we have this huge gap. So that means that volatility is gonna kick in. You know, if markets continue to sell off right below the 183 points and dollars, excuse me, and 180, so we have 3 points, you know, of great probabilities on the bearish territory. And over here we already see that the volume, the bearish volume, is starting to increase, and it's closer to the average. So I repeat, next week we expect a continuation of these bearish influx, bearish sentiments towards the, towards the 21 weeks moving average, past resistance, now support. And over here also, this is the region of the support upside trend line over here. Okay, so now let's have a look at the Nasdaq Composite. The composites, there it is. All-time highs, indecision type of candles, you know, spinning tops or dojis, and close below the 4 weeks moving average. You see here we have this gap between the 4 weeks moving average and the 8-week moving average, so we are looking for continuity. So directly we're gonna go directly in search of the 8 weeks moving average, and then if we close below the 8-week moving average, directly boom towards the support level over here, and that was past a resistance for 1 and 2 times. You see here this gap, now resistance, and now support, and the region also of the 21 weeks moving average over here, and it's gonna coincide also with these channels supports over here right around the 49.55 points. Okay, that's it for the Nasdaq 100, the Nasdaq Composite. Now the Nasdaq 100. Nasdaq 100, same scenario. Dojis, spinning tops, indecision, and now you see bearish volume closer to the average, and we expect more bearish weeks. So next week below 47.55 in direction of this level over here. First support, first critical level, the region of the 8 weeks moving average at 47.13, and then if there's a break below that moving average, and then you see here this past resistance, now support, region of the 21 weeks moving average at 45.30 points. And if it goes lower, you already see over here we have the channels supports in the same region. Okay, now let's have a look at the Qs, the ETF QQQs. Exactly the same. We see here the triangle. Wasn't expect a break or to the upside or to the downside, but you can see here clearly a close below the 4 weeks moving average. So now we expect that break below to continue, and more sell-off, more bearish operators, you know, more sellers entering in these trends, you know. So we expect a continuation for a couple of weeks, let's say for the last week of August and for the first weeks of September. We expect markets to continue to sell off over here towards the 8 weeks moving average around the $115 over here. Okay, the QQQ, that's it. Now let's have a look at the S&P 500, but first, as I like to do here on the weekly map to see the performance, it's red, bearish for the basic materials, healthcare, industrial goods, consumer goods and services, and 50-50 green and red for technology and financials. You see the losers over here for this week: Google, AT&T, and Verizon and IBM. And in the financials, bad week for Wells Fargo, Berkshire Hathaway, and you know, Goldman Sachs, and here American Express, and that's it. But for the rest, you know, great week for Bank of America Corporation, and over here MasterCard had a great week, JP Morgan and Citigroup. Okay, that's it. Now let's go back to the charts, and over here you can see all-time highs, indecision weeks, sideways movements. Now boom, bearish, a bearish week below the 4 weeks moving averages, and then here close just at the level of the 8-week moving average. We expect a continuation for next week, so below 2160 in direction towards the 2110 points, and that coincides with a past resistance for 1 time, a 2 time, and now it's a support, and that also coincides with the trend line support level and the 21 weeks moving average right around the 2110 2100 points. Okay, now let's have a look at the spiders, the SPY, the ETF. Same scenario, you know, indecision, spinning top, bearish pressure, bearish volume started to come closer to the average, close right below the 8 weeks moving average. We expect a continuation below 250 dollars, excuse me, in direction towards the past resistance over here. Now supports at the 21 weeks moving average region or zone right around the $210. Okay, let's have a bigger look, and you see here the trend line. So if we go below, if it goes below, we're gonna maybe bounce over here at this support and then boom, go higher. Or if we come here and then break below, we have here a support over here at the 52 weeks moving average right around the 204 205, and maybe if it goes maybe over here, yeah, $200. Okay, now let's continue. Let's have a look at the Russell, the small cap Russell 2000, and the Russell 2000, the big picture first here. Now sideways movements for the past 2 to 3 weeks. Now this week we have that type of candle, but you can see over here that there's no past resistance, you know, at that level. We just rejected the 1250 points region, and then we came to close above the 4 weeks moving average, but it could be a sign, a kind of shooting star, but you know, we don't have another reference point, you know, as a past resistance, you know, at that level. We have here a couple of sideways movements over here and over here, but nothing concrete. So what we do expect for next week, we have a gap over here, so maybe market is gonna start to sell off, and we're gonna probably have some type of another weeks of sideways movements, you know, between 1220 and 1250, and then if it sell offs, it breaks below the 8 weeks moving average, then it's gonna go lower, you know, and fill this gap over here, and then hit that past resistance, now supports region of the 21 weeks moving average. And over here you can clearly see this trend line, boom, acting as a support right around the 1170. Okay, now the IWM, the ETF, and exactly the same, you know, boom, over here we have that indecision candle right around the 4 weeks moving average. If we break below, boom, first step, the 8-week moving average. So we're gonna expect sideways movements, you know, the volume is still, the bulls are still in control over here. But if we go below 121, boom, here you see this, the support gonna come here, maybe bounce here, a little bit lower at that resistance level. Now support over here, region of the 21 weeks MA, and then bounce and then go higher, or maybe we can break higher from here. So watch out. Okay, now let's have a look at the Treasury Notes, the 10-year Treasury Notes. No, first we're gonna have a look at the where is the 10-year? No, not this one. Oh, excuse me. Wait, please. It's just a second, please. T note. Here it is. No, that's the ETF. We're gonna have a look later. Oh yeah, I'm gonna find it like that. US 10. Okay, the yield. Okay. First, the yield. We see bearish week. The yield. Past week, we analyze the ascendant triangle, the resistance over here, break above. Now the yield is at 1.6%, and we see here that's trend line. So if we break above and break above the 21 weeks MA, so the yield can go higher towards the 1.70. Now let's have a look at the now let's have a look at the ETF. Here we have the ETF, and for the ETF bearish week, we have over here that triangle. You can see here this channel, you know, going up like this, a B, a C, and now a D. Now going back over here to retest that support, past resistance over here, and resistance also over here. So you see we are below the 21 weeks MA, convergence between the 4 weeks MA and the 8 weeks MA, divergence now. So volatility is going to start to kick in, and you see over here we have a huge gap. That means greater fluctuations, greater volatility. You know, you see over here those candles. So now we're gonna see if there is a continuation. We break below the 131 mark, we're gonna go below towards the 129 mark, but with huge volatility. So here we are bearish. Now the 30-year Treasury bonds, 30-year yield, exactly the same thing, triangle over here. We are at the convergence point of the triangle, you know, a bearish week, a reversal over here, bullish week, but now we are in indecision. We are still in this triangle, forming a inside week candle type of pattern. So now what are we expecting? We are expecting markets, the yield to go higher, you know. That's a great probability, but we need the percentage to go higher, above the 2.3% in direction to 2.35% over here. And we have a gap over here also. So that's what we are expecting, because we see lower highs over here. So we expect that kind of movement, you know, towards the upside. But first we need to break out of these. We need to break up over here above 2.32%. Okay, now let's have a look at the ETF. Where is the ETF? And there it is. And we are bearish over here. We see that descending triangle over here. We have the support level, break below. The cross between the 4 weeks moving average and the 8 weeks moving average already occurred. Now we see a divergence, so things are starting to speed up, and we are moving towards the 21 moving average over here. So this, I can put it like that. And if we continue, if there is a continuation, you know, in that bearish sentiment, we're gonna go and trying to to reach these past resistance, now supports over here at 166. But first we have to reach, and we expect a close closer to the region of the 21 weeks moving average at 169. Okay, and now the DXY, the US dollar index, moving sideways. Past week was bearish. Now this week a bullish rejection, still in a inside week candle. You can clearly see here this bullish channel. You know, we break below that channel, but we came here. Now it's a support zone. Now what we are expecting is, or we are gonna go back higher, or we're gonna see another bearish week or a sideways movement. So we need a direction now. So for those of you who are trading the forex, the currencies, and all the pairs of the US dollar, so be very patient and be cautious, you know, because we don't have a clear direction. If we reject that bearish sentiment over here and we go back higher, so there's going to be a sign for people to start buying the US dollar, you know. But for the moment we need a confirmation. Okay, so that's it for the US markets. Now let's have a look at the global macroeconomic data, you know. And what do we have on Monday? Monday in the US at 2:30 p.m. we have some news, some core PCE prices, and personal income, personal spending. None of great impact. At 4:30 we have the Dallas Fed Manufacturing Index from August. On Tuesday, what do we have in the US? We have impact data in Japan, in Switzerland, in the Eurozone, in Germany, but in the US nothing of greater impact. Only at 3 and 4 p.m. in the afternoon we're gonna have the S&P case chiller home prices and the CB consumer confidence. On Wednesday we have something in the UK, in Germany in the morning, in the Eurozone, and then in the US at 1 p.m. in Brazil 2 p.m. India 2 p.m. and for the at 2:15 p.m. in the US we have ADP employment change from August, and at 2:30 we have something in Canada. At 4 and 4:30 we have pending home sales and EIA crude oil stocks and gasoline stocks. Next at 9:15 we have the at the Fed we have Mr. Evans' speech. And on Thursday what do we have? We have data release in China, in Spain, Switzerland, Italy, Germany, Eurozone, Great Britain, South Africa. At 2:30 in the US you have initial jobless claims from August, unit labor costs quarter-on-quarter final second quarter, and you have the non-farm productivity quarter-on-quarter final second quarter. And at 4 p.m. we have the ISM manufacturing PMI from August. And then at 4:30 we have the EIA natural gas stocks change from August, and we have at the Fed a speech from Master. At 10 p.m. total vehicle sales. And on Friday, September the 2nd, we have data in Japan, in Canada, and at 2:30 p.m. in the US, we have average hourly earnings month on month from August and a balance of trade from July. Next, at 2:30, we have the non-farm payrolls from August, and next we have the unemployment rates from August. At 4 p.m. we have factory orders month on month from July, and another speech at 9 p.m. from the Feds, whose the speaker is Mr. or Mrs. No, I think it's Mr. Lacker. So that's it for the global macroeconomic data release. And then now let's go back to the charts, and now we're gonna do commodities. First, we're gonna start with crude oil. Oh, excuse me. We're gonna start with crude oil. There it is. Okay. Just a quick recap. You see the left shoulder, the head, and the right shoulder. Now you see oil starting to go up, you know, in this stairs pattern, you know. Now we have reached the resistance level over here. We see those trend lines. First break here, retest, and then boom, continuing higher. And then now we have the second resistance trend line here. We reach, bam, retest that past resistance, now support, bounce at that support, now boom, we're going higher, you know, strong with confirmation, a close above. Now we're moving a little bit sideways, and then we expect now to break out, you know, to break up and go higher, you know, above the $50 a barrel. But we can already see that the 21 weeks, 52 weeks moving average, it's acting as a support. You see the convergence between the 4 weeks moving average and the 21 weeks moving average. We are already above all of those three moving averages, so maybe things are starting to accelerate, you know, on a technical perspective, you know. And then boom, moving higher, and you see right above the $50 a barrel mark, we are moving straight towards $60 a barrel for the crude oil. So that's it. You see, first of all, we have like a 52. It's going to be a critical zone, you know, over here, because we're trying already to reach those levels in the past. Okay, now let's have a look at LCO, the Brent oil, and same scenario, you know, over here. Strong bullish candle, now at resistance, you know, this resistance here and here. See here this sideways movement, now resistance over here. Now we expect to see the same type of behavior, you know, in the price to start to go sideways. That's an inside week candle, but we expect a continuation of that bullish sentiment, first of all from 51.20 towards $53 a barrel, and then boom, going higher. But you can see the 52 weeks moving average acting as a support. A cross of the 4 weeks moving average crosses above all of the above the 8 weeks and 21 weeks moving average. A convergence, now the divergence, and that means an impulse in volatility, so price can go higher, you know, with that type of candles, you know, strong moves towards the upsides, at least $3 move, $2.50 to $3 move, you know, that's what we expect for the Brent oil and for the oil in general. So in this particular case, we have to be cautious and to be alert of and aware of what is taking place at the OPEP and with all the oil fundamentals, you know. So that's it. Now let's go to the precious metals, you know, gold first. Gold still in these sideways movements. You see the triangle formation over here, a bearish wick, excuse me. You see the pattern of, that's a rejection pattern, you know. Now we break below that support over here, and we are moving lower. We are already at a support, at the support, you know, of the trend line, the bullish trend line over here. We are reaching the support at 1310. So below that we have here past resistance at 1295, $1,295 an ounce. So over here, that's the region of the 21 weeks moving average. So we expect prices to bounce over here, and from here maybe to continue higher. So we can expect to see, you know, that type of channel, you know, over here. But we remain in the, let's say, in the overall and in longer term, we remain bullish. Okay, now let's have a look at silver. What do we expect for silver? Silver bearish for a month. We have reached a top over here, a strong resistance at 2120. We rejected it. We can see over here that tweezer top pattern formation, break below the 1940, 1950, then boom, break below also the 4 weeks and 8 weeks moving averages. We see a convergence, and then boom, an acceleration. You see here we have a gap between that point of convergence and the 21 weeks moving average. That means volatility, and as you can see here, strong candle. We're gonna completely erase the performance of that candle by going downwards over here with volatility and with energy towards the downside, and we're gonna come back here and bounce and reach this past resistance, now support at 21 week moving average at $18, and maybe we can bounce from here and then boom, go back higher. You can see here you can start to draw a channel, but we remain in the overall sentiment remains bullish, you know, because we can clearly see here the pattern. We go up, stabilize, then break up, stabilize, we retest past resistance, now support, strong support, boom, confirmation, we go up, boom, we break up, then over here a stop. Now, you know, at that level over here we have resistance. Now we go back to retest past support. Over here we bounce, and if the fundamentals are good, so we're gonna go back towards the 20 and much higher. Now the target, it's $22 an ounce for silver. Okay, and now finally let's have a look at the Bitcoin versus the US dollar. Okay, Bitcoin versus the US dollar, but it's been a month without direction. We are in a inside week type of setup, you know, but these long shadows over here, they tell us something. They're sending us a signal. That signal is that prices are going lower, you know, with the Bitcoin. We're starting to selling the Bitcoin, but as I said in past reviews and reports, that we are forming a cup and handle pattern, you know, the same thing as you saw over here. It's gonna happen here. You see the cup and now the handle, you know, same thing, though we are going back towards the 460 level, you know, over here. So we're gonna expect prices to go lower. You know, we already have reached here the convergence points between the 4 weeks moving average and the 21 weeks moving average. Already here you can see in the past the convergence between the 4 weeks and the 8 weeks moving average. The divergence now, the 4 weeks moving average crosses below, and then in search of the 21 weeks moving average. Once we're gonna break below and have a bearish candle close below the 21 weeks moving average, then we're gonna go directly towards the 52 weeks moving average that is acting as a support at that level. You know, that level, it's a past resistance. Now it's a support over here, so the target is 455, 440, let's say, and from here we can bounce. So that's gonna be our handle. You know, we're forming the handle. You know, as you can see here, that's an handle. But now take it and flip it to the right side of your screen, and then you have your cup over here. Repeat, you have your cup, and now the handle, and then bounce from here and then going higher. Okay, people, thanks for watching and bearing with me on these weekly reports. So my name is sergiok.kilembe from Trading Wall Street TV, and I'm also a consultant, I do private consultancy, you know, for people who want to trade the market, start investing and all those stuffs. Me, I'm based here in Europe. I'm in Madrid, but I'm doing and giving these type of services for people here in Europe, people in Africa, and also in Latin America. Predominantly, I have Hispanics, people, Hispanic speaking Spanish speaking people, you know, as clients. As you can see here, my page is in Spanish, but I can do it also in English and in French. So I have I already have clients, you know, in Switzerland, in Belgium, in Luxembourg, and in Africa, in French speaking countries of Africa, in Belgium, France, and all over the place here in Europe, and here in Spain, obviously. And that's it. So you can have a look at the page. I'm gonna have the same link. That's a temporary page, because we have the other page, the jctrim.com, the official page. I'm working on that because I'm gonna start to upload more content and more services, because that's a part of the services I'm offering. You know, I'm also offering other type of consultancy, more driving towards businesses and you know, corporate businesses, but for individuals, for retail traders and people who want to trade their own retirement account, their own, you know, brokerage account. So I offer services, and you can come and take a private consultancy with me. You have all the fees and the program, and it's great. You know, people are very, very happy with what I have to offer, because this is not like you know, taking a course, an online course. No, me here we are one-on-one. You know, it's a one-on-one. These are one-on-one sessions, you know, with me, and it's a one-time fee that you pay, and it's for life. You know, we can do it on your own schedule, you know, and we're gonna schedule the appointments, online appointments, or I do it mainly on Viber, on Facebook Messenger, on Skype. People are texting me, sending me messages, and me, I'm responding to my clients, you know, with all that, all the apps, you know, you have now. It's, you know, it's the 21st century, so technology is awesome, so we can do a lot of things. So that's it. We can do FaceTime, you know, via video conferences, or talking at the telephone, and I'm sending you graphics. You can ask me questions, and I'm gonna answer it. But first of all, you need to be one of my clients, and there it is, you know. And people over here in Spain, in Madrid, but we also do a type of trading club when we meet once a week, and we sit down for 4 to 5 hours, and we are talking about the markets with live trading, you know. Live trading, we are discussing, you know, we are more swing traders, so we are discussing our positions, our trading probabilities, and operation negotiations, you know, in the markets. And that's it. That's very great, and that's awesome. People are loving it. So for you guys over there in the US, or whether or wherever in the world, so ask me something, you know, take a shot, message me something or whatever, and let's see if we can work together. If I can help you, I'm sure I can. So that's it. Okay, don't hesitate. You have over here, you have my private number. You can call me, you can message me. Facebook, you have my Facebook, my YouTube channel. So that's it. We have everything, you know, to contact me, and let's say if I can help you with the services I'm offering. Okay, thank you guys. Have a great week, and see you next week for another US weekly market report. Bye.